the February Finance Committee meeting for Sutton Valley Homeowners Association. My name is Kim Harris. I'm the treasurer, and I'm going to call this meeting to order at 6:34 p.m. This association recognizes a land acknowledgement and an anti-racism statement that can be found on our website. And for our roll call, I'd like to acknowledge that we have Jessica Staten is here, Callie Cass, Jean Makesner, Richard Waltke, and Jacob Galfano, and a second board member, Sonia Volt. We are all present today. And at this time, and our general manager, Dan Pike, of course. And at this time, I would like to call for an adoption of the agenda and move to adopt the agenda.
Move to adopt the agenda.
Second.
Thank you. Also, for those of you that are new, we need to approve some minutes from last year that did not get approved. Although you may or may not have looked them over and you were here, as a committee, we need to approve those minutes so that they can be uploaded to the website. And the minutes are for July 21st, 2021, August 18th, 2021, and October 20th, 2021. So I would like to move for the approval of those minutes, those 3 months of minutes.
Move to approve.
Yep. Second.
Thank you. Okay, so our minutes are approved, and this moment, we don't really have any continuing business, but for new business, I'd like to have our finance committee maybe introduce themselves and say how long you've lived in Sutton Valley. And I see a hand raised from Jessica. Yes.
I just want to note for the record, I abstained from approval of the minutes since I was not at those meetings.
No problem. Was that another voice there other than Jessica? Okay. Thank you. So at this time, I'd like the new finance committee members to maybe introduce themselves for our new business and say how long you've lived in Sutton Valley. So I'll start on my screen. First is Jacob Galfano.
Thank you, Board Member Harris. Hi, everybody. My name is Jacob Galfano. I have lived in Sutton Valley for a little more than 4 years now. I'm a classroom teacher in Stanwood, also neighbor to Board Member Harris, who invited me to consider volunteering for this committee. I have a little bit of experience working with nonprofit organizations, most specifically with grant making and fundraising. So I have, a little bit of experience looking at balance sheets, but not in too much depth. And that's what kind of captured my interest for this opportunity. So really here to learn from all of you what goes into this, and hopefully get to a point where I'm contributing more than I'm taking sooner than later. Thank you.
Thank you. Callie.
I'm Callie Cass, and this is my second year on the finance committee this go round. And I've been in Sutton Valley 16 years in April. Woohoo! And I have known Jessica almost that amount of time, and I'm very excited she's on the committee.
Awesome.
Yay.
Thank you, Callie. Dan, would you like to introduce yourself, even though you are our GM and you've had your chats with GM? Well, go ahead and let you introduce yourself.
Sure. So I'm Dan Pike. I used to live in Sutton Valley. I live in Bellingham these days, but I have been the Sutton Valley General Manager since December 27th in the middle of a raging snowstorm. So it's been kind of a fun start, and I am looking forward to working with all of you as well as with the board and the community at large to helping Sudden Valley be an even better place than it already is. I was mayor of Bellingham before I took this position, quite a while before, in 2007 to 2011. I've gotten an undergraduate degree from Huxley College in planning, urban and regional planning, and then a master's from Harvard in public administration. I've managed large projects for the state DOT. I managed a small patient planning organization in Skagit County Council of Governments, which is kind of like the Whatcom County Council of Governments. And I look forward to working with all of you and getting to know you better as the years go by. So thanks for your service.
Thank you. Jessica.
Hi, I've lived in Sudden Valley since 2001. Worked for the association from 2001 to about 2004 or 5 as the account manager. And I noticed, Joel, you still have that hideous border in your office. I've been doing nonprofit accounting for about 25 years. And so I'm looking forward to the committee.
Thank you. Joel, would you like to introduce yourself? Oh, you're on mute. That's the famous saying for the Zoom era.
I was unmuted, then I muted myself. But so I'm Joel Heverling. I've been the county manager out here full-time since September of 2019. So this is kind of my third year going into this. So I'm sure maybe a lot of you are familiar with me if you watched any of the finance committee meetings or the board meetings, especially any of the budgets. You would have seen me for certain or heard about me. So, yeah, I look forward to working with all of you.
Thank you, Joel. Jean.
Hello, I've been in Sudden Valley. I'm pretty new. I've been here about 1.5 years. Before then, I was in Seattle. I'm a veterinarian. I owned 2 large veterinary hospitals and managed them for 10 years. And then when I retired from that, I helped run a early stage startup business. I was their financial manager for about 4 years. I got my MBA in 2016, and that's what I've done. So I'm happy to be here and to repeat my 2nd year with the Finance Committee.
Thank you. Richard.
Yes, can you hear me?
Yes.
Well, how about that? I'm all connected. That's great. Well, this is my first night with the Finance Committee, as you probably are all aware. I've been in Sudden Valley since 2016. Background-wise, I have a fairly robust resume, so I won't go into all of that. I have an MBA in telecom management, many years in telecommunications, working the finance end of it. I was an auditor also in the telecommunications area for 6 years. I've had my own business for 10, consulting business. I've had a few secondary careers since then. Finally, I decided to retire to Sudden Valley. My wife's family all lives here in Sudden Valley and also in Whidbey Island. As far as finance, I'm really looking forward to helping out, and looking forward to being of service to everybody. And I was already started auditing the financial statement. I already found some errors here, so maybe we can discuss it sometime. Anyway, so there I am.
Thank you, Richard. And also, if you hit your space bar, you can mute yourself. That way it keeps the background noise down. And then if you need to unmute yourself, you can just hit your space bar again.
Oh, okay, cool.
A cool trick. And Sonia, Vault.
Hi. So I have lived in Sudden Valley since the end of 2012. So this will be coming up on my 10-year anniversary here. And we love it, of course. It's beautiful. And we like our neighbors, just like everybody else. It's a really special place to be. I am on the board of directors. I am the secretary. and I chair the document review committee. I sat on the long range planning committee for 2 years. I would be going into my 3rd year term. Kim and I and AJ Tischlader, who's the president, and also Brian Cope, who sits on the board, worked together that first year to come up with the current planning process that we utilize so that we're connecting our strategic planning with our budget strategy, right? So that because what we found is there's a disconnect. And so it's very important that we don't have a budget that isn't really being implemented well. But we put a process in place. It's a 3-year planning process, and it starts, kind of the cyclical planning where like I said, if you guys have looked at the budget, you'll see that it reflects those strategies that were developed based on the community survey that we had a really good turnout, and we'll continue to do that. And we're developing more ways. I know you guys, if you've watched the board meetings, we're going to be working more and more, especially now that Dan's here, we'll have more time to be able to bring the community in more, so that as we move forward for next year's planning, that we're going to get more community input, more input from you guys, from the finance committee, so that we can hone that process a little bit better, so that we can really start, seeing the community that we all want while being fiscally responsible.
And you'll notice that in your emails, I sent you all links to the long range planning survey, and also the committee's vision, values, and mission for the community, so that all of that is like an overarching framework for our decision making and our foundation. So that's why I sent you all that information. And just to announce to the community, this is our first meeting in this of the year. We skipped the January meeting because of the snow response and the weather and onboarding our new GM. We felt it'd be more appropriate for the board to spend their time doing that and table finance until February. So with that being said, I am going to introduce Joel and let him discuss our finances. He's also going to share his screen and show you the way our financial planning or financial, what word am I looking for? The way our financiers are organized on paper. That's what I'm trying to say. And just give you an idea of what they look like. One thing I learned from Joel as the treasurer is that there's different ways to organize your finances for different organizations. Everybody's different. And so he's gonna give us a little walkthrough of ours and go over the numbers. And feel free to ask him questions as we go along. And with that, I'll hand the meeting over to you, Joel.
Okay, thank you. Just gonna So I take it everyone can see the white screen with numbers on it?
Yeah.
Okay.
Does he need to bump it up for anybody? Is it
I was going to say, I can see it. I can't read it.
bump it up for us, Joel?
That's the point. If I just keep it like this.
You can skip through and we won't have any questions. No.
I have any.
How's that? Is that better? Enough?
It's good. Is that good for everybody? Thumbs up? Okay, got some thumbs up.
Okay, so what I'm actually looking at, because you saw, I'm sure, 2 addendums on the Finance Committee webpage. And the first addendum is the financial statement. So it's like a 6-page set of statements. And then the second addendum is the capital reporting. So actually, what I've got up, what I'm looking at right now is, it's actually, so this is the full set of statements. Anyone can see this. It's on the Finance Committee webpage too. It's kind of down below where the addendums are, like the links, and then you can actually click on like December 2021 financial statements. And this gives you the full set of statements. And that's actually what I always go with. It's just what gets in the Finance Committee packet is this more stripped down version. But So if you see me scrolling to certain pages that to where you're like, hey, that's not in the finance committee packet part of it, that's because I'm looking at the link that's on finance committee website that gives the full set of statements. Is like 33 pages long. But so I'll just go ahead and start off. First page is obviously the balance sheet with this. The top, so the way that this balance sheet is organized is it's organized in terms of this top part. So like this blue part here is the top half of it is going to be your operating part of the balance sheet. So all the assets, liabilities that basically pertain to just the operation. So when you hear people talking about the operating budget versus the capital budget, so for the balance sheet, this top part is so like you have operating cash, building deposit funds that we hold, accounts payables, accrued vacation liability, so on and so forth. The one thing that I'll point out here, which I'm sure you probably heard, is the PPP loan liability that we got back in May of 2020 is 357,700. So it's showing up here as a liability in 2020. Now it's zeroed out because in September of 2021, we were awarded forgiveness of this by the Small Business Administration. So that has been forgiven. So now it's no longer a liability, and you'll see it show up on the income statement as a debt extinguishment. So basically it's income to us since we don't have to pay it back. And then down here is just more emergency operating cash, UDR cash. I'll talk about what UDR is in just a moment. And then as we go down here, so basically the second half of this, basically this part of the balance sheet is relating to your capital assets and liabilities. So the big part of this is obviously these sections through here would be all your capital cash accounts, SURF, roads, mailbox. Now, when you hear the word SURF, that stands for Capital Repair Replacement Reserve Fund. And basically SURF is going to be everything except for roads and mailboxes. So if we were to go out and replace a building, it would come out of the SURF fund. If we replaced a truck, it would come out of the SURF fund. But if we do works on roads or major, like culverts, things like that, that all comes out of the roads funds. And then we have a mailbox fund that we quite frankly haven't really touched yet because we haven't had to touch it yet in terms of mailbox type. So if we go out and replace mailboxes, things like that, it would come from the mailbox fund. And then you have like I'll get into this a little bit more detail when I go to the next sheet beyond the income statement. We'll get to the what's called like kind of like a cash sheet, like a snapshot of cash positions. And then down here, you'll see fixed assets and lots held for sale. These amounts really don't change all that much. I mean, the lots held for sale. So like, for example, we bought something. If we went out and bought a truck for 50,000, it would come out of this SURF fund. If I just did this immediately today and then redid the balance sheet immediately, you'd see the SURF fund drop by $50,000 cash. And then you'd see the fixed assets go up by 50,000. So basically it's just so these fixed assets are going to be in all your capital stuff. So SURF, roads, mailboxes. And then the only real liability that we have, well, I mean, we have a couple of capital leases, but the biggest liability that I'm sure everyone has heard about is a SURF loan that we took out years ago to work on the SURF loan projects like the marina stand pipe and the sprung structure and so on and so forth. And then this is just the equity section of the balance sheet. So you can see the whole thing balances. Your net assets right here is going to balance out with all your equity accounts here. But in terms of like, so basically the big thing with the balance sheet is, let's just say we, if you saw like a negative net operating asset, that basically means we're eating into things like, at this point, like prepaid dues. And, but fortunately, that's not a situation for us, not even close. Nothing has ever faced us like that anytime, well, since I've been here. But, and you can see that we have gone up from year over year 2020 in terms of operating cash by over $500,000, 525,000. Now, of course, remember that $357,000, $700 PPP loan liability. That obviously contributes, in terms of like the overall snapshot picture of cash positions going up. Now, if we go to the next page, this is really the most, I think, interesting page, which basically this is the bottom line of our income positions is what's going on here. So this side, or basically anything under that blue, like these three columns, this is all month to date, just the current month is what you're looking at. Then anything under this blue right here is exactly what it says, year to date, 12 months ending 12/31/2021.
Joel, I don't know if you see, there's a question from Jessica.
Oh, yes, go ahead, Jessica. Sorry.
Sorry, before we move on from the balance sheet, I just had a couple quick questions. Is that okay?
Okay.
Ask questions now? Or do you prefer we wait till the end?
No, you can go ahead.
Okay, so on the AR account, how many lots are comprised in there? I mean, is it like 5 people who have never paid for 10 years, or is it, 400 people that are
You're
just
you're talking about this account right there.
correct?
Now, in terms of like how many actual people that would make up, I'd have to go in there to look at the GL, but at the last page of this, which is the last page of like the addendum, that's addendum number 1. But this always shows up at the very end of these reports, and this gives you an analysis of lots. So like, for example, you can see total billable lots that we have here. Right now we have 3,124 billable lots. So like now, if someone were to go out and combine their lots, like consolidate their vacant lot into a developed lot, then that'll drop down, obviously, then it'd be 3,123.
Okay.
So,
Yeah, so maybe I'm just curious if we have like I said, 5 owners that are super delinquent, or if this is just like 40.
well, actually, this part of it right here. So like this part, this will start to give you the information that what you're really talking about: actual 1 month due, 2 month, actual 2 months due, 3-4 months due, and so on and so forth.
Right.
It breaks it down by.
But that doesn't say if they're, because the vacant lots could all be owned by one contractor, right? So I'm just curious if.
Oh yeah, I don't know, and we don't report that on that level on these.
Yeah, if you could just maybe get out an email, in the next couple of days, that would be nice.
Okay, sure.
And the other question was, how are reserves? Are they all in just normal savings accounts? Or are they in money markets, or?
They're in, yes. So like they're either in savings accounts or money market type, premium money market accounts is what they're called. So, so basically you'll see these big accounts, especially like the big capital accounts, and even for operating type accounts, the big chunks of money will be in premium money market accounts.
Got it. Okay. And then the last question was, what is the interest rate on the loan?
It's about, gosh, I want to say it's like 4.6 something % off the top of my head.
Okay. Thank you. That's all.
Great question, Jessica.
Thank you.
Sure, yeah. So now I went on to the second page, the income statement page. And so, like I said, anything under here, this blue area, these 3 columns, this is all current month to date. Then under here, these are all year to date. Year to date, 12 months ending 12/31/2021. Now, once obviously, since we're into December, we'll just focus on year to date at this point. But as you can see, so like the bottom line is for the year. So we ended out in 2021 with about $515,000 in surplus at the end of 2021. And so now last year we ended out with a deficit of about 111,000. So obviously we're in a much better position at the end of 2021 than we were at the end of 2020, which you would kind of expect, especially from that's when the pandemic sort of was really hitting, I guess, everyone at that point. One
A
big item.
question from Richard.
Oh, sure, Richard.
Hey, Joel, that number you're there where the cursor is flashing, is that 515,474 or that's 15,474?
No, that's 515,474.
Okay, well, I made an error then.
Oh.
That's the number I was having a problem with. I couldn't come up with that number. I came up with like 15,000 or 51,474. So that was just the total for that particular column on expenses. The net income.
Yeah, so this income is, yeah.
So I come up with 51,474 and that's got 15,474. So I don't quite understand where I'm going wrong.
Well, this number right here, 550,474.
Yeah.
This is the total revenue minus the total expenses right there.
Well, yeah, okay, all right. I think it's probably just the way it printed out. I was looking at 15, looks like 15 and it's actually 515. So, okay.
Oh, yeah, yeah.
Ignore the question.
Now I'll have to disqualify you from the audit for this.
Oh my goodness. Well, you wouldn't be the first one. There's a long heralded line in front of you.
Thank you, Richard.
Okay.
So yeah, the biggest number that always, that I always mention, always talk about, obviously it's the bottom line in terms of how much do we really have in operating income, like from month to month, year to date. And at the end of December 2021, we 515,474 operating income. This is to the right. This is the capital part of it, the capital income part of it. This part is still a little, this is a moving target a little more because we still have stuff to close out at the end of the year in terms of like fixed assets, that sort of stuff. But so this amount will change, but this is really the important amount in terms of like when you guys, when you do the budgeting, when you're working on the operating budget, this is really the number, this operating column, this is really what you're working on for the operating budget. And then when you hear capital budgeting, then it's really kind of focusing on the money in this far right column, capital reserves. And then anything below this is anything that went into or came out of UDR. That stands for undesignated reserve. So basically what UDR is if people are delinquent on their dues, if they haven't paid their dues, let's just say, for example, there's still dues outstanding at the end of 2021, like what Jessica was talking about, that in hitting that AR account. Now, if they pay it in 2022, when we take those operating dues in, it doesn't go to this operations, it goes into undesignated reserve is where it goes. And then, so basically that's another reserve account. It's another pot of cash that only the board can authorize spending from. That's really what it comes down to. So whatever goes into UDR is going to be delinquent dues that are now being paid for from prior years. And then any expenditures that come out of that have to be specifically approved for by the board themselves, just like any capital project that comes out of roads or SERP or mailboxes.
Do those
Now,
go through the finance committee before they go to the board for approval?
Are you talking about UDR type stuff?
Well, any reserve.
Yes, yes, Jessica. Typically, how it goes is like any sort of capital type projects, UDR included, that would go in front of you guys first, and then it goes in front of the board right after that.
Great, thanks.
Yeah, there are times to where it comes down to it, where something could be really time sensitive,
Oh yeah.
like a capital project, and then something like that can just, and usually it goes to the board because there's not enough, meaning like the finance committee already met,
Right.
and then
Right.
something, yeah, so. This is a very important number, this collection percentage right here. And most people have probably heard about it, or the number will come up. What's the collection rate? So basically what's the percentage of people paying their dues? That's really what they're talking about. So, and that's what the budget is built around, is that collection rate. So the collection rate in 2021 was 95%. Then the collection rate that we just did the latest budget for, the 2022 budget for, the collection rate was 93%. So we ended out the year in 2021 with a 96.8% collection rate, which means we budgeted for 95%. We actually got 96.8%. So anything above the budget collection rate is good. And basically what that means is for any percent over the collection rate, that's you could figure on that's about another $22,000 to operations. So it was like a boon to operations by about $22,000 for every 1% you're above the collection rate. And anyone can almost calculate, gee, what, you literally all you'd have to do is just take this number, like just take the budgeted dues number and divide it by 100, for the year, and that's you yourself would also see like how much would come in extra at that point. So if we got, like, for example, since we budgeted 93% collection rate for 2022, if we came in at even a 96% collection rate at the end of 2022, that would be another $66,000 for operations, to help out operations. And it's true for capital too. Obviously, that means more money coming in for capital funds as well. Usually I'll mention this number, and so like Richard, we already got into a couple of these numbers from Richard's question, but I'll talk about an expense to revenue ratio, which is just whenever I say that ratio, all that is the expenses right here divided by the revenues. So total expenses divided by total revenues. Obviously, in this case, what you want is you want to see a lower number. A lower number is always better in this case, expense to revenue ratio. So we had at the end of December, it was 88.4% expense to revenue ratio. At the end of November, now our net income was higher at the end of November, so the ratio was lower at 83.2%. However, in December of 2020, remember how I said we had a loss of about 111,000. So our expense to revenue ratio was 103%. So a lower number is always better on that ratio. But that's a ratio that I set almost every single month, and I'll usually compare it to the prior month and then to the year before that. Now this is a page that actually I look at a lot, like board members can look at it a lot, like when we do budgeting, we can refer to this page a lot. And this is basically what this is showing you is all your capital and operating reserve funds. So like, for example, here's the SURF, the roads. Well, let's just look at the SURF. So like net available cash, 12/31/2021. So this 2,688,455, that should tie right back to the balance sheet. Here, of course, I minimized it a little bit. There the number is right there. Then the starting cash for SURF 1,688,052. I would expect to see that at the very top, which is what I see. And so basically what you're doing is you're starting out with starting cash for the year, and then you're looking at the amount of dues that came into SURF, interest income on those premium money market accounts and savings accounts. And then you'll see expenditures, and what expenditures just basically means all capital expenditures. So the money that we put out for capital projects, SURF loan payments also kind of get wrapped up in just basically this is just total money that went out the door in SURF. And then that's what gives us the net available cash at 12/31/2021, which will tie back to the balance sheet. And then this number right here, which is a very important number, this obligated expenses, this is probably one of the most important numbers on here. So just remember that 283,525 for SURF. Now I'm going to, can you guys see this page, this SURF projects open page?
Yes.
Okay, good. So what this is showing you right here, so this is a handy page. This is showing you every single capital project so anything on here, the board approved it. And so usually how it would go, like what Jessica was talking about, these would all go in front of the finance committee first. Then the finance committee would discuss it and approve it. And then it will go on to the board, and then the board will give final approval on it. And then once it's approved
Or Joe, we might ask for more information. and
Yes,
have
yeah,
it- And
absolutely,
have it
yeah.
resubmitted if it is
Right.
not a
Yeah.
good request. So,
And that does happen, yes. So yes, so finance committee or the board, could say they want to see more information on something, then it could go back in front of them again. But as soon as, so the last thing that, let's look at the pool filter cover. I mean, we had other things that obviously were approved since then, as if maybe you've seen like in the last board meeting, the board meeting before that, but as soon as the project becomes approved, then that's the total amount in this column that the board approved could be spent on that project. Then to the right of that, on this spreadsheet, you would see how much we've expended so far, and then what we have left over to spend. And then this aggregates, obviously, that's what we're still, we've already earmarked this money to be spent on these projects right here, 283,525. And then you'd see that there's that, then I roll forward this month or this number here, which then takes away from this number up here, which then gives you net usable cash. This is how much money you really have to work with right now. How much, yeah, Jessica, you had a question.
Yeah, can you go back to the list of the capital projects in progress? Yeah, so these are still projects that are being worked, correct?
No,
No,
well,
they're
actually,
Close.
yeah,
Sorry.
actually, Tyler, who's our engineer out here, contractor. So Tyler and Sonia and myself, we've met because we'll do this where we meet, at the end of the year, and then we'll discuss with them, what's the status of these projects? Can I close them out? So actually, when this went to the website, that just happened to be Monday for the deadline to get it onto the website. Then yesterday, a good number of these, I know now are closed. So then once they're closed, then that's when I'll close it out and put it onto the balance sheet as a fixed asset. And then here's an example, like golf course irrigation system. This is done. This is closed. So then this unspent, maybe probably what your next question is, Jessica, I'm guessing, is this unspent portion right here, then just becomes unreleased in a sense, unearmarked. So
Yeah, it was raising some red flags because some of these are super old. So I wasn't sure if there was a process. So thank you.
oh, yes, yes. So like, for example, here's a good one, this golf course irrigation system. I would have closed this out for 2020. However, in 2020, I could see in the general ledger that we still had costs coming in for it. So it's like, so the project was still open. Now, the cost stopped pretty early on in 2020. So that means when I close this thing, then what I'll do is I'll put it on the books in the fixed asset in the month that we're done with this thing. So then it'll start depreciating. This could start depreciating back in February or so of 2020. I mean, excuse me, of 2021.
Right, okay. Thank you.
Yeah, sure. And so the good thing is now that we kind of explain surf like that, roads is going to be the exact same drill, where now you see the 737,926, then I could just go back to the third page or the second page, excuse me, on this. And there's that 737,926 here. And these are all the open project. Now, a lot of these I'm going to close too, same sort of thing. So like quite a few of these I'm closing out as well as of yesterday's discussion. And then when the thing gets closed, it'll just drop off the spreadsheet. So, and then whatever was left over just gets, now it's no longer earmarked. And then, yeah, so that's, but that's basically to date at the end of 12/31/2021. Here are the costs, this blue column, the costs of everything that's been expended on these projects.
So the other question is, I know that there was supposed to be a refund of the
capital reserve transfer fee.
Yeah.
Yeah,
And
right.
has that refund taken place? Is it out of these balances or is it?
Well, actually, now that's this column right here, capital reserve holding fund.
Mhm.
This amount right here is because of the board resolution. So this amount right here, is being transferred back into the SURF account. And then when this program gets up and running, then you could think of those refunds coming out of SURF, basically returning that money.
So that money is still in these balances then?
Yeah, that money is in this balance right here, this column. But you'll notice there are no obligations against it because we don't, projects aren't spent out of this thing.
I'm just wondering if that really is a potential liability and shouldn't be in that obligated expense, whatever that refund amount is going to be. Because really that's money that's we don't really own right now. It's supposed to go back.
It's just sitting in its own account. He's just leaving it there to show.
Right.
I understand that, but
I know what you're getting at, Jessica, but like, for example, in the audited, so if we go back to the balance sheet. So here it is right here, right?
Right.
So here's the capital reserve holding fee. So here's the cash. Then I think what you're getting at is, well, then technically we should have a liability on here since we have to give the money back. Now on these internal statements, it just sits here and here it's cash, right? But on the audited balance sheet, it's a liability. And then that's actually getting into a whole technical ball of wax. It's accounting standards codification 606, which then basically I'll just touch on it very briefly without going into this, but when on the audited financial statements, some of these things get recast because it's a new auditing standard or accounting standard. So basically, just to make a long story short, according to that accounting standard, if we took in this money, we'll just look at this. We'll look at that, whatever. This $1.1 million, since we took that money and then the standard will say, well, until you actually spend that money on until the money is spent, you can't classify it as revenue yet. So then it has to be recast as a liability. So on the internal statements, it looks like this, but on the actual audited financial statements, it's recast as a liability.
Yeah, I understand that. I'm just suggesting that from a finance committee perspective, if we're being asked to review and approve a capital project, are we going to be looking at these statements and saying, oh, look, we have $7 million available, when in fact it's really only 5 million or 6 million. And if we're putting potentially obligated funds on that other sheet, wouldn't we be better served putting that potential obligation there? So for clarity.
Yeah.
Do we know how much that refund is going to be?
No, we don't. See, that's another question too. So,
okay.
So since we don't know how much the actual refund will be, it's that one's a little kind of in a gray area right now.
And Joel, is there the possibility, to Jessica's point, of making another asterisk on the bottom of one of these reports to say that there is an undetermined amount that will be coming out of that particular reserve account, so that as we are making those judgment calls on budgeting, we're keeping that in mind? Because Jessica, I like the same thing. Oh, go ahead, Tanya.
I'm so sorry. I apologize. I was going to say that money's actually not part of our budget. We didn't. That money is basically.
I understand that, but we've made now a commitment as an organization to refund those dollars, and my feeling is that we should have at least even a ballpark estimate. I mean, I've heard a lot of people throwing numbers around, $1 million, $1.5 million.
Well, technically, every bit of it is.
Technically, we don't know.
Well, technically, every bit of it's obligated to return back.
So
I mean,
this
at this
whole
point,
1.57.
right? That's
And I feel like this should be taken out as potential available funds.
Well, this is, I'll tell you a solution, an easy solution to this is beginning in January, right? This column could just be retitled. And then it could just stay right here, and then it's not affecting the SURF amount right here. It could just be retitled as an additional SURF amount,
I
Does,
don't think you're understanding what I'm
Oh,
saying.
yeah, does that make it clear
understand
that
what
the
you're saying.
funds,
What
the-
you're saying, Jessica, is you're saying, gee, if you go to like, if you want to spend money and you need money to spend, you're looking at this number.
No, if I'm looking at how much money we have available to spend, I'm looking at the 2.404.
Right. Okay, fine. Yeah. Excuse me. the
Yeah, so
2.4.
that's why I'm
Yeah,
saying
yeah.
it's
Yeah.
it's confusing to say we actually have 1.1 available when in fact.
This money was never, this money, usually when they say they're going to do a surf request or roads request, they're not looking at this amount.
I understand that. I'm just suggesting that when you look at this total over here of 5.897, that's not in fact all available money to spend. Right?
Oh, this right here?
Right? Because it includes this 1.1, which we are obligated to return.
Yeah, but I mean, don't get lost looking at this number. When you do a request, when someone puts a request in front of the
I get
finance
it.
committee and
I get
So
it.
Joel, I have a suggestion that actually speaks to both of those. Why can't we just make that as a standalone column?
Well, yeah, well, that's,
retile it, and standalone. I understand that it needs to show on here, and then, but yeah, we can make it a standalone, and then it just doesn't reflect in the total, but it can be standalone and actually show what it is, perhaps. Like then it's not in the total capital reserve funds column. So it just doesn't confuse, just for clarity, and then have it as a standalone, perhaps even right next to that. Would that work?
That worked for me.
it could, I guess. Yeah.
Yeah.
Okay.
Great conversation. I like your questions, and I like that resolution to have the transparency in the document, but also have the numbers reflect what's actually usable. So.
Excuse me. Actually, I wanted to say one more thing. Go ahead.
Is that Callie?
yes, it was.
Okay, go for it.
I was just going to ask, I thought last year you shared with the committee a document that had our long-term capital planning and it was something that we could use as a tool to kind of compare to requests that were coming forward along with our capital budget and our operating budget. And is that still available?
I don't know. I'm not sure what.
Are you talking about the reserve
She's
study?
probably
Probably
she's
the
probably
reverse
talking about
study.
the
Reserve
It was a
study?
future budget. It was long-term planning budget, because it was a 2-year,
Yes.
3-year.
Oh, and it was in the budget document.
part of
Then,
the budget.
yeah.
Yeah.
Mhm.
So I'm just thinking that might be a very good thing for us to have moving forward.
Yeah, and Joel can
I
shoot
agree.
that out to everybody, the budget presentation, Joel, and it's at the back of the.
You're
think
talking
towards
the
about
back.
specifically like in 2022, we're going to work on
Oh,
these
right.
projects.
Yeah.
In 2023, we're going to spend this money here. Is that
Right.
what you're referring to, Callie? Okay, yeah.
Right.
But
Yeah,
yeah,
for context.
now I know what you're talking about. And actually, yeah, Kelly, I can just email that to you guys. It's actually still on the website, sitting on the AGM page, but I can send that out again.
I think Kelly's right. Can you just include this every month with it too, so we can just review it, make sure we know where we are?
Include what every month?
What we just talked about, the long-term budget.
The projection of capital spending, right?
Yeah.
Our budgeted
Are you
capital.
talking about this?
No, she's talking about the actual the budget document where we've got the capital roads and the surf planning for
For the next
that's on
10
there for
years.
2020.
Yeah.
Well, I think we just show 2022 on that budget document, because what it is we didn't project out. We're totally redoing it. We basically because the reserve study was not accurate. We're doing a complete level 1 reserve study. Plus we've got we put out an RFQ to come in and totally reevaluate the roads and the obviously, as you guys, most of you are aware, we're having a lot of drainage and issues with culverts. There's been a lot of work going on with that right now. So all of that's being reevaluated and work has started. So there will be a new 10-year capital plan that comes out this year. So, but we felt it would be inaccurate if we, you know, if we went out 10 years, because we were basing it on information that wasn't current and good. So we just kind of pushed out to 2022, working off of information we had. But this year will be a completely brand new 10-year capital improvement plan, so that we've got a really strong budget. The other thing that we did, for those of you that were already on here last year, you already know that we were the association was behind on 1 year behind on the reserve study, 1 year behind on the audit over the last several years. So last year, what you saw, what the finance committee went through, was 2 audits and 2 reserve studies. They were the level 3 reserve study, so they were just updates, but we did manage to get out our reserve studies had reflected they had included buildings that did not exist. I think $14 million in buildings that did not exist. And just by removing them, and we didn't touch anything else because we didn't have anybody on site, but just by removing things that don't exist and that the members had never approved, you can look at those reserve studies and see that suddenly we're actually very well funded. You know, we've been told for quite a while that we were underfunded, our reserves were inadequate. That's not what we're seeing now. You know, when they're not artificially manipulated like that. So we're going to work really hard to get back to best practices. And again, it's really nice to hear this conversation, because I think this is a really good finance committee to kind of keep everybody focused on doing that. And because we just need to change those processes, right? And so this will be the year that we really start putting them in place and moving that forward. So
everything that we discussed about, you know, year 2, year 3, year 4 budgeting is no longer applicable.
No, it's still there. I just meant that 10-year capital improvement plan was put into place based on the previous reserve study. And so because there will be a full level 1 reserve study, meaning that will be people boots on the ground doing the evaluations. One of the things, especially with the roads, for instance, the reserve study that we have for our roads, it didn't accurately reflect the true cost of anything. Like for culverts and for bridges, it talks about bridge repair and it estimates something like $9,000 each. Well, we just had to approve $339,000, $337,000 to replace the golf course bridge. These bridges cannot be replaced at $9,000 each. It's a bad. It's just, we need more accurate numbers so that we can do our budget correctly. And the other thing is that we need to make sure that the audit and the reserve study is done prior to us going into budget season. Because what was happening too is the boards were budgeting off of a year, the bad information. It was not current information. You know, you need to see this information current, and as you move into the budget season. So now we've worked, you guys and the board worked really hard last year to put us right in that steady place, right? So we're going to be moving into this budget season in a much stronger position with more information, so that we can confidently budget out over the next few years and be very sure about those numbers.
So am I correct, Sonia, and thank you for all that work that you guys have done. Am I correct in that we're probably just fine for capital projects, but roads we may be under?
We're actually okay it appears that we're okay on roads. We have, like for this year, we pretty much approved the roads projects for 2022 at last Thursday's board meeting. And so I cannot recall, but there's quite a few projects for this year. And then what's going to happen, what we're hoping is that as we go into, the budget planning process with this, the engineering company will be able to have the initial plans for moving into next year for the recommended roads projects for next year. And so that'll be for next year. And then next year, they'll give us the second half, of that phase project. And those will include not only the roads, but also those shoulders, because we've got lots of drainage issues and things going on. So we're going to be, we'll be working on that this year too. And you guys, a lot of you probably already seen Strimler gravel has been out there and having to rework the ditches, and Bayside is out dealing with the culverts. So we're working on it, but we'll have the engineer come in and do that full roads plan. And I believe it's I think it's a 10-year plan, Joel. Is that what the roads plan is that they'll come in with, or is it a 5-year plan? Do you recall?
It used to be a 5-year.
Can you say that again, Sonia?
I just can't remember. I said on that RFQ, is that a 10-year or a 5-year plan? Do you remember on the roads?
Oh, for the roads?
I believe it's a 10-year plan.
A 10-year, yeah. Okay.
Yeah, I was just talking with AJ about it. I'm quite certain it's a 10-year plan.
Okay.
Just one quick question. What would you say is the estimated investment income rate that we're getting on those money markets?
I don't know. I honestly don't know. I'd have to look it up before I say
Okay.
a hard, fast number.
Okay, if you could check into that would be nice to know. Thank you.
Sure.
You know what? And Jessica, I'm going to ask Joel too, because like I said, he can come with that final number of what we're talking about expenditures on the roads this year that we just approved with the board. So it'll kind of show what the projected spending is on the roads, but we're still really, really good on the road. I mean, AJ and Tyler from P&W and Impact Design, have been in discussions, about what we need to do this year. What are these projects that we can't put off any longer? And in addition, and AJ kind of explained it at the board meeting, but there have been some of these projects have been in the works. They, like all of the design and everything and the planning and the permitting had already been in place, right? And so we need to go ahead and just start moving these projects forward. And they're real important for the additional road work that we're going to need to complete, because some of these are offset, they buy us, we can use them to offset these mitigation aspects that we'll be required to do if we dig down on some of this asphalt here in the watershed. So it's just it's something that we have to do, and it's taking care of projects. Some of them have been on the books even for a couple of years and just had not been dealt with. And then some of them are these emergency type drainage issues and everything.
So my assumption is that this 738,000 are those projects, right?
I don't know. Oh,
She's referring to the
no,
obligated funds here on.
Is this listed? I can't read it. Is that listed on there, Joe? I can't read what
It was
that
under
says.
the
I'm really
obligated,
sorry.
that was the obligated funds column total.
Well, this is for 2021, so I'm not sure it's showing what we did for 2022. Are those on this column, Joel? I'm so sorry, I can't read it. What we did on Thursday night, is that on there?
One of the items is the fast response drainage issue is on here.
Okay. And what about the additional roads projects? Is that on there too, for the Spring Road and everything?
Those aren't on there since those didn't affect the 2021 projects,
Okay.
meaning, so this sheet is as of 12/31/2021.
Got it.
That'll
Okay.
show up next time.
Thank you.
Thank you, Joel.
Matter of fact,
I apologize. I can't read that small print.
since we're still talking about the reserves, actually, so then now the other line item that I mentioned this before, the UDR line item, undesignated reserve. So let me go back to, okay, so this 49,426 obligated balance right here on that. So the third page of that capital project or just open capital projects is actually the UDR page. So this actually shows anything that's still a code that's still open that the board has approved in the past. So these are just kind of open kind of pools of money that the board approved that could be spent on that. And that's where that 49,426 amount is. Some of these we'll just get rid of, like for example, Firewise, we'll just close something like this, possibly Area Z mitigation. This hazardous tree removal is totally spent, this 40,000 line item, but we still have kind of like a little chunk of money right here for an approval that went through in 2019. GM recruiting, could be closed out, but that's, so there is a third page for this. Now, when these items, when they're closed, these are not fixed assets. They're literally like just expenditures on the income statement. So they just go away, meaning then the amount is just unobligated, so to speak. So like I said, anytime for when someone is paying their dues from a prior year or prior years, I should say, that amount will go right into here in UDR, the operations portion. Capital portion obviously does not do that. It goes into where it belongs, surf roads, mailboxes. And then then the other item is emergency operations. And this is just money that just sits here until the board themselves authorize money to come out of here to be spent on something.
So for example, Joel, with the weather response that just occurred, the snow, would we be pulling from this fund here?
Emergency ops, typically that would come from UDR.
Okay.
So the emergency ops bucket is really kind of a pool of money to be used if, kind of like, if it comes down to we need to fund a month or two of operations, then we could pull from this. But usually when the board does pull money from operating reserve funds, they'll take it from UDR first before they'll take it from emergency ops. That basically, like this is, like I said, it's a handy sheet that I'll go back and look at. I'll refer to it. Like if someone ever asked me, how much money do we have in surf, that we could tap into, or roads, for a project, or then I'll go back and take a look at this sheet. That obviously gets updated, from month to month. Now this next page, we're looking at the current month, but I think at this point, the following two pages are exactly the same, but this is just the current month page. I'm just going to go ahead and fast forward to the year-to-date page. It's the same setup, exactly the same as the current month, but this is exactly what it says year-to-date. But this is it's another way to look at the income statement. So it's basically the income statement just presented in a different manner. So remember when I talked about that 515,474 surplus, there's that amount right here. So that, if I went right back to the income statement, so the income statement is going to show the organization from an organizational perspective, from a top level perspective. And it just has basically categories of revenues, categories of expenditure types. And there you have the 515,474 surplus. And then if I go back to this page, year-to-date page, so you have the same 515,474, but now it's broken down by individual departments. So then you can see how this is how the departments contributed to make up that amount, that 515,474. And then you can see just what departments over budget, under budget. So this is a handy page, and I'll look at this page as well. That does break down by department in terms of, like, if we look at this, basically the biggest item here would be the maintenance department, which is under budget, or over budget by about, close to 176,000. Most of this, over 100,000 of that is weather related right there, all the snow response and over the year from 2021. Then the rest of it is just kind of a hodgepodge of like other repair and maintenance categories, and so on and so forth. But then you can see now, this department, golf department, I talk about every single month. I always highlight this one. If I highlight any department, it's always going to be golf, since golf is the biggest. They have the most revenue coming in to the organization. And actually, so the good thing about golf right here, this first column is the actual revenue. So this is for the full year. You'll see that golf for the first time has over $1 million in revenue actually for Sudden Valley. So at the end of 2021, they pulled in $1.1 million. Last year, they actually also had a good year too. So last year, the end of 2020, they had real close to $924,000 that they pulled in, but they did even better in 2021, which means they had another, approximately $196,000 in revenue higher in 2021. Now, the total expenses for these departments, so it's this actual salary benefits column right here. And then this is just salary benefits, better, worse, budget wise. And then this actual other expenses number here. So like this 345,856 plus this 666,413. So they had $1,012,269 in expenses for the year. Now, last year they had about real close to $870,000 in expenses. So their expenses were about, and we'll just round it up, about $143,000 higher this year than last year. But then again, their revenue is about $196,000 higher. So they had total net income for the year of $108,020. Last year, they had total net income of about $54,281. So they're actually real close to about $54,000 higher net income at the end of 2021 than they were at the end of 2020, which is really good. That's
Question on rec. I see the revenue, but I'm not seeing any expenses. Why is that?
so like the rec schools parks department right here.
Right. Because
So there are expenses. So like here, see this, well, underneath where this cursor is, this 236,072, there's their actual salary benefits. And then under here, 138,925, they're all other expenses. Then that gives them actually, so actually, because keep in mind, rec also has that special assessment. So it's probably a good thing that you pointed this out, because so I can also point out as well with that rec special assessment, which goes to the rec department, 412,048. So they get that from the portion of dues. And then, so now they ended out the year with 63,481 net income.
When does that special assessment end?
It ends like May of 2023, I want to say, right in there.
Will 2021 have the expenses broken out like the other departments up above?
Well, say that again.
So the ones up above, ACC, security, golf, you have all, salaries, other expenses. Are you going to break out the rec programming the same way for 2022?
Oh yeah, actually, yes, you'll see, I'll get to a couple more pages that'll break it out better than what you're imagining, actually. So actually, maybe I'll just do that. I'm just going to go to, because usually once I get to the end of that, I mean, we've basically covered the financial statements. But now keep in mind, I'm looking at the big report, the long report that's on the Finance Committee website. And this goes into a heck of a lot of detail. So like, let's just go ahead and talk about rec. What the heck, since that's what we're talking about. So just remember that 63,481 number right here.
Mm-hmm.
So if I kept scrolling down here, now I'm getting into the actual individual departments, income statements, basically. And then there's ACC, security, I'll keep going down, accounting, facilities, maintenance, and actually, then we're going to hit golf first. So here's golf's, and this is golf turf combined, because the golf enterprise is golf and turf combined. And there's that year-to-date income, 108,020. Then Marina should follow. And then right after Marina, we're going to get to the whole rec department, which is pools, parks, rec department. And then here you'll see on a GL line item basis. Here's that year-to-date 12 months right here, column. And you'll see the individual GLs that make this up. And then I'll just go to the second page first. There's that 63,481 net income. And then you can see literally all the GLs that make that up. Starting with obviously the revenues, total recreation income, there's the total rec special assessment, there's the other miscellaneous type revenues that go to it as well. And then after that come all the expenditures that come right off it. That
Okay,
lead
so
to
you
that.
do are booking salary and wages. It's just not showing on that summary page.
Oh, you were talking about salary and wages, yeah. So let me,
Yeah, I saw it.
right, yeah, right. So right in here.
So if you were to add the salary and wages and other expenses on those rows like you do to the departments above, you can do that.
Mhm,
Okay,
that's correct, yes.
thank you.
Yeah, sure.
Can I ask
Hey, Joel,
about
I'm
this?
sorry.
What happens when that assessment it goes away? How does the department get funded?
Well, actually, Gene, it's a good thing you asked that. So that's something that we'll have to tackle during the next budget season. So,
Yeah.
Right. Okay.
so I guess stay tuned is what I can say for
Right.
The other
Okay.
question I had
Oh,
is what
sorry.
is common, oh, sorry, go ahead.
You want me to take the screen share off? Or
If you're done, yeah, unless anyone has questions. on
unless
the
anyone else had
document.
any questions, I'll take the screen share off.
I just had a question. I'm so sorry. I tried to raise my hand. I don't think I did
We
it
see
right.
it, yeah, we see it.
Oh, okay. So Joel, I just had a question because I saw on there that, about the barn lease, the barn 8 lease income that's under the
Right,
health
yeah.
club.
Uh-huh.
That is for CTK. Is that not right?
Yeah,
Is that
I mean,
a
it
lease?
would be-
Is that
Correct, yeah.
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 appropriate to be under there?
Well, I mean, like that is in the rec department.
Yeah. that
But-
makes sense.
Well, is it in the rec department?
The only other place that it could be recoded to would be facilities. So it'd either be facilities or rec. But I guess it's swept into the rec department as kind of the overall umbrella of recreational type activities that are carried on in that facility.
Well, who's supporting the group? I mean, if it's a rec person.
It would be rec staff, yeah.
Yeah, so that,
Yeah.
it makes sense. I'm curious, why do you split out accounting, admin, and common costs rather than just having one administrative department?
Because those are literally three separate type cost centers. So common costs are going to be like any cost that's just associated to the entire type organization, like property taxes, legal, and things like that. Admin is its own separate department, especially also for budgeting as well. And same with accounting.
And you don't allocate any of these overhead costs among the different departments, right?
No, not from an operational standpoint. I mean, so it's like, so I'm going to take the cost and just plug it to like a facility cost, like a building cost or a maintenance. Or now how we do that is like, for example, we get utilities that come in, then the utilities will literally be pointed to the department, where it belongs, whether it's facilities, golf, rec, so on.
Okay, thank you.
Yeah.
Are there any more committee questions before I open up the questions to the community? Looks like we have 2 community members present.
No more questions from me, but I do want to thank Joel for that presentation. I appreciate it and being
Sure, yeah.
all
Yeah.
my questions.
Yeah, you're welcome.
Yeah.
Thank you, Joe.
I learned a
Well,
lot from all the
Well,
questions
I think you
today.
did an awesome job. And Jessica, thank you so much for the questions. I
Yeah.
learned a lot too.
Yeah, learned a lot. So any more committee questions before I ask for John to come back and see if we have any community questions based on our December 2021 finances or any other finance questions for that matter? Richard?
Yeah, I have a question for Joel. I wonder how much experience do you have working with this budget, Joel? I was really impressed with the complexity and the ability to capture all the various operating elements in the budget and be able to crossfoot to the various impacts that each entry has to make.
Well, this is just my very first time looking at it, so I'm just a really quick study, you know.
He's an intern. He's an intern.
Yeah.
He's also a jokester too.
Yeah, you got to watch him. He will, pull the wool over your eyes if you try to let him.
I mean, I spent a good 30 minutes looking at it beforehand.
Putting this together.
But yeah, in terms of like geez, I guess what, Sonia, this would be the third year going into the budget cycle, with the second year with the board, and then of course when I was in here in 2019 as well. So this will be the third year going into it, and also with the reserve studies.
So you've had good time to track down the nuances.
Oh yes, yeah. There's definitely, I mean, like it's a little more complicated than what someone might think, especially when you have the big separation between capital and operations. That's the big thing. It's almost like they're literally almost like two different sets of self-balancing books in a sense. So like once in a while someone will do something and someone on staff will do something, they'll move like an expense, from roads to operations or vice versa, something that really should be moved. And then they forget to move the cash portion of it. That's all it takes to throw the balance sheet out of balance, or to
Right.
immediately cause a problem.
Yeah. Well, congratulations. It appears you've done a good job so far.
Oh, thank you. Yeah.
Yeah.
See, so now Richard can stay on the finance committee.
Yeah, Joel
Was a
makes
test.
his evaluations based on compliments. I see community member Miss Cope says no questions from her. Thank you, everyone. Thank you for attending, Anne. And so opportunity, I think we have one other community member as well. And I do see a hand from Leslie.
Go ahead and bring you on over here, Leslie. And you're free to unmute when you like.
Okay, you can hear me now.
Sure.
I just wanted to kind of take a look at the income statement summary, the second page of the report, and just kind of notice a couple of things there. Since we budgeted for a 95% collection rate and actually collected up to 96.8%. That is just about $40,000 of extra income that we collected that we really hadn't budgeted for. The second thing was that that loan forgiveness at about $360,000, that was another kind of unanticipated windfall that came through. And then for the golf income, there's another 100,000 or so there that was not budgeted for. So all of these things are things that we really hadn't planned on. And it kind of makes the net income look not quite so good, because if you're saying that $515,000 is, the income, you have to take those other things away from it, because that's, they weren't in the budget. And it kind of almost looks to me like you've got an operating loss at that point. Is that true?
So
Or am I looking at it wrong?
I see a hand up from Sonia. Sonia, were you going to address
well,
Leslie's question?
sure. I was going to say that the PPP money was definitely not a windfall. What it did is it didn't even quite come up to replacing the money that was depleted from the board choosing to waive an entire month of dues. So it really wasn't a windfall at all. We lost money in that month of April of 2020 when the board Leslie, when you guys decided to waive that month of dues at the front end of the pandemic. So the PPP money came in and replaced money that we would have had had that not happened. So
We're just
we're
looking at,
still,
we're looking at 2021 here, not going back to 2020.
well,
And
we're
I'm
talking
just
about
kind of looking at the balance sheet for this year.
Yeah, like Leslie, to address your point, if we did not have that 357,700 PPP, then it is fair to say that then the income would be $157,000 or close to 158,000. And then that is true that golf is about $101,000 of profit as well.
Yeah, and then the excess income from understanding the percentage of collection. So
Yeah.
anyway, it's a little bit different way of looking at it. I just thought I would bring that up. Thank you.
Sure. Yeah.
Thank you, Leslie.
All right, thanks, Leslie.
Are there any more questions or comments? And again, I want to thank Joel for his presentation. Very thorough presentation and helpful. If you're new, like Jacob, Richard, you know, it's overwhelming in the beginning, but if you stare at the paperwork over and over for 6 months, then it'll start making sense to you.
Oh, yeah.
I'm counting on that.
Yeah.
But tonight you're like, okay, I'm drinking from a fire hose here.
Matter of fact, we could have set a record actually in terms of how much time we spent going over the financial statements, but we could have spent double the time, no problem. You know, if we even got into it even more, or
Yeah.
triple actually. So.
Well, but and our GM Dan has a comment. And Sonia, do you still have your hand up? You can go after Dan.
I'm sorry, I didn't mean to. Sorry about that.
You know, I just wanted to say, first of all, Joel, I thought it was a great presentation, but I also thought it was great questions, and I think it's reflective of, you know, I noticed that a lot of you have a finance background, and I'll say that's a luxury that many volunteer boards do not have. So I feel that we're very fortunate to have the breadth of experience stepping up here. So I just want to say thank you all for your service and for your great questions tonight. So thank you.
Thanks, Dan.
Agreed.
Well, in the absence of any additional business, can we have a motion to adjourn?
Motion to adjourn.
Second.
Okay. Well, the Finance Committee meeting is now closed at, let's see what my watch says, 7:50.